Hi everyone, thank you for joining in. We are here today at the Private Capital Investment Conference being hosted at the ASX, and I'm delighted to be joined by Stephen Goakes, the Managing Director of Natgen, a firm that specializes in providing well-considered, risk-managed investment opportunities and quality strategic advice in the commercial real estate sector. Stephen, thank you for joining me.
Hello, Rhythm.
Now, Stephen, to begin with, can you give us an overview of Natgen and its co-investment philosophy, and how does Natgen differentiate itself from other investment firms in terms of risk management and strategic advice?
Okay, thanks very much. Natgen is a property funds management company. We have been going for about 5 years in its current guise, and it's run by myself and my business partner, Brett Nelson. We run a series of separated property funds for various investors across the country. We've got investors in every state and territory, and we've got about $100 million of developments and about $70 million of standing assets within our portfolios at the moment. In terms of how we differentiate ourselves, I think it's really our understanding of property, a deep understanding of property. Pretty much all of this grey hair has come from the property industry, and really it's about understanding what property is all about and where risk comes within property. So what we're always seeking to do is find mispriced assets, basically. One good thing about the property market and the commercial property market is it's not a very efficient market. There's always positives and negatives that you can take advantage of.
Right.
So when we say mispriced assets, we're trying to buy things that are below their risk managed rate of return that they should be effectively.
That's very fascinating, Stephen. Now, building on that, could you elaborate on the specific factors or trends that you look for when assessing potential investments, especially in the commercial real estate sector?
Yeah, so real estate is all about placement of people. So really it's a sociological process as much as anything, because people have to be somewhere, they have to live somewhere, they have to work somewhere, and all those somewheres are the places that the commercial real estate industry provides for them. So when we're looking for how to choose and what we're going to invest in, we look at sociological factors. So, for example, in the past, we had in the 1970s, VCRs were invented. Pretty much killed the cinema industry until they worked out how to fight back. So that stopped existing. Online shopping has pretty much killed the mid-sized mall in the United States, and I'm prepared to say I'm one of those guys that likes looking at abandonedmalls.com on the internet. It's fascinating, but big companies were killed by that, and those sectors were too. So it's looking at those sociological phenomena that are coming forward and making sure that we buy for value for those things.
Very well said, Stephen. Now, for the next question, let's delve into the current opportunity. So, can you share more details about the 2 commercial property assets in Queensland that Natgen is currently offering, and what were the key considerations that led to the selection of these specific properties?
Sure. Our Natgen Investment Trust QC24 is just finishing off about the last 10% of its capital raise at the moment. And we were looking at, again, some of those issues of what could be mispriced in the office sector. So whilst office has been significantly affected in CBDs, in capital city CBDs, due to work from home and COVID-induced factors, those same factors haven't really impacted regional location offices. So in terms of Queensland, for example, there's been a shift to lifestyle cities, such as Cairns and the Gold Coast, and a number in between. So we looked at the 2 ends of that spectrum and said, well, let's look for good quality performing assets in those places. They're both very low vacancy markets. So we've chosen one in each of those places, which have good long leases, not super long, but long enough to guarantee income in the medium term. And really, they're the sort of places that we know are located such that they will maintain demand for a very long time.
Definitely. Now, diversification is often a crucial consideration for investors. So, how does the portfolio approach with these two properties in different locations and with varied income sources mitigate potential risks?
Okay, so in terms of diversification, we're looking to our investors themselves to diversify their own portfolios. So that's why we have a series of investments which they can diversify across what we're doing, as well as other sectors and what have you. But in the case of these two properties, they're diversified in terms of location and terms of the tenant type, and also the lease profile. So, all diversification is about reducing risk for a given level of return, or increasing return for a given level of risk, I guess.
Yeah.
So we see that having these two properties with that level of diversification certainly achieves that and gives us the opportunity to provide a 9% per annum return on properties that probably separately wouldn't attract that level of return.
Absolutely. Now, with the current economic climate and potential uncertainties, what measures or strategies does Natgen employ to manage risks and protect investor capital?
No matter what type of economic times we're facing, it would pretty much be the same. So what we do is within all our trusts, we keep a very significant working capital account. So we keep a substantial amount of cash aside. That's a little bit of a drag on our returns, but it's very useful in having that to allow for whatever vicissitudes in the market face us over time.
Yeah.
So that's the first thing. Second thing is borrowing capacity. We always make sure we don't over borrow so that we're never in trouble in terms of paying interest or paying back the debt, which is typically where people get into trouble. And thirdly, one of the lovely things about commercial property is that active management can actually improve it. If you buy shares in a company, you can't actually manage the company that you've bought shares in. But in terms of a particular building or whatever, we can take that on and really change the income profile and particularly the lease termination profile by good active management. And those three things together give a level of risk mitigation which we're pretty comfortable with.
Amazing. That's wonderful, Brent. Now, lastly, being here today at the private capital event hosted at the ASX, could you share any key takeaways or highlights from your experience at the event?
Yeah, I think it's been a terrific event, and I've learnt a lot about private equity. I think what we're always encouraging our unit holders and investors to do is to actively understand in great depth what we're doing, because if they understand that, first of all, they see value in what we're doing, but also they're better informed and they understand their investment portfolio a lot better, and that's good for everyone involved.
Absolutely. Well, thank you, Stephen, for sharing these valuable insights about Natgen and its investment opportunities. We look forward to your continued success. And to our viewers, thank you for joining in for this session. And I look forward to seeing you guys in my next interview. Thank you, Stephen.
Thank you very much.